Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, June 8th, 2023. Before I click through all the charts, just want to encourage you to please click like, please click subscribe, please share the content with friends and colleagues, and last but not least, please check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this: daily triple Q report, daily SPY report, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks every week you never see on YouTube that cover, kind of cater to 3 to 5 week longer term swing traders, 3 to 5 month near term investors. We're always looking for 20% moves at least on the underlying stocks, and we cover some of the bigger names that I'm sure you've traded or invested in the past. Anyway, check out wickedstocks.com. So here we are. I'm going to start with the big picture as usual. The big picture is always the underlying trend. The underlying trend now bullish following the settlement last week above this 206.01 nearly 2-year channel top, 18 months plus, that then indicated a couple things: good low for the year and likely bullish continuation to our next midterm target at 268.21, which is rising on a weekly basis. This is a 2 to 3 month objective at 268.21. We could certainly reach it faster than that, as we did coming off that January low to the February high. It could be a move like that. We're certainly in the midst of that right now. I don't think it's inevitable that we'll reach 268.21 over the next 3 to 5 weeks, but we could if we close this week above 239.39, which I don't think is likely. 239.39 is nothing more than a mid band within that channel that has parallel structure to the lows. And I can actually show that on the daily chart. We'll take a look. This is the daily chart version of the same 239.06 to 240.03. Now I just have 239.39 still way up to the upper right as our weekly resistance area. That is the weekly chart version of this, but there you have it. And so a couple things I want to say about this chart: that on Tuesday we did close just above the 221.25 long-term 3/8 Fibonacci level. And by long-term, I'm talking from the all-time high of 21, late 21. Was that late 21? Yes, against the January 23 high of this year. 3/8 back up is 221.25. And we did close just above it on Tuesday. At the time, I'd mentioned I didn't think it was an incredibly actionable buy signal given its close proximity to 221.25. But nonetheless, given the overall bullish framework, not surprised that we gapped higher, continued higher yesterday being Wednesday. I'm always recording these the day before, that. Right after the close, I cover the next day. These are projections. These are the levels for Thursday, just so you know. So there's that. So, downside today, 221.25 still offers decent support, and it is backed up by a rising channel bottom over the last couple of weeks at 219.65. So this is a good area to buy into for day traders. I thought about bumping this up to a 2-star support area. In other words, it might, given the significance of 221.25, it may well contain selling through the rest of the week. And from here, we can rally within several days to the targeted 239.39 level. So if you want to treat this as a 3 to 5 day buy zone swing trade opportunity, you certainly have my blessing. I'll also say that if we close today below 219.65, it pivots the market south through the rest of the week and likely into early next. I would call the 206 handle our 2 to 3 day objective then, if we close below 219.65. 206.01, I've already shown you on that weekly chart, that long-term channel we settled above last week. And where are you? 206.57 is a new rising 1/3 speed line based in part on Wednesday's high. It obviously includes the April low in that calculation. So this zone, not only 206.01, that long-term channel top in the weekly chart, but this rising speed line at 206.57 will be a range of support over the next few days that can contain selling not only through next week, but not only through June, but even through the rest of the year. Because of the significance of this long-term channel top and the fact that we're expecting 239.39 as a 2 to 3 week objective and 268.21 essentially as a 2 to 3 month objective. Now, of course, if we were to close sooner than later above 239.39, we're just another 1 to 3 weeks away from actually reaching our targeted 268.21 channel top, where we can top out on a monthly, possibly quarterly basis. And we'll talk a lot more about that if we approach it. Now, in terms of the upside for the day, let me take a look at this formation. So I'm just throwing numbers here at you. 237.15 is just a minor point. I've re-upgraded 233.33 to a session containment level because of our proximity from it. We got to 230.82 actually on Wednesday. If we push through 230.82, 233.33 in reach. 230.33 is nothing more than the February 22 low. It was a significant, meaningful low, and we came, obviously we rallied for, a couple of months off of that before falling again and taking that area out a couple of months later. So 233.33 is a decent day resistance level that, if tested, can contain session strength. We've got 237.15. Where else? Let's see here. I don't think. That's. I'm trying to think if I've shown 227.28, and I have not. 227.28 shows up on your 5-minute, your 30-minute bar chart. We do comb through, by the way, the intraday charts. And if you were to take a look, you know how I construct these channels. There is a horizontal channel structure right now around 227.28 that covers the last half of yesterday. I see it as a meaningful upward pivot point for today. So 227.28 can contain intraday strength. If we push or open today above 227.28, that 233.33 level that I showed a moment ago in reach, where we can place a daily high. And if we settle above 233.33, we'll probably tomorrow test that 239 area resistance, 239.39 on the weekly chart, where we could top out through next week and fall off again for a week or two. That's not considered likely. It's just quite possible. So, the way I'm going to cover this now, I'm going to come into the final minute here, and I'm just going to say that holding above 219.65 and 221.25, this market remains constructive through the rest of the week and into next, expecting the 239.39 level over the next 3 to 5 days. 3 to 5 day swing trade remains up above 219.65, and it reverses down below 219.65, then expecting the 206 handle, where a solid buy opportunity presents itself through next week and even really through the rest of the year. If we were to close below the 206 handle support in the coming days, that would be a significant sell signal, and I do think I have that charted. 190.84, just sort of an intermediate target. Really, if we close below the 206 handle support, I'm expecting the 179 handle and climbing within 2 to 3 weeks. So we would have a meaningful 2 to 3 week sell signal if we close below 206.01 any day. And the last thing I will say, that if we finish any week out below 206.01, I would ultimately anticipate this horizontal channel structure at 157.31 within a month or two. But I'll be covering that in subsequent Tesla reports. I'm going to call it a print. This is it for Thursday's Tesla. I'll be back tomorrow with Fridays. You have a great evening.